Good evening and welcome to Jnanavarthini. Today we have yet another interesting topic. Adepu sir is going to talk about CBDC, central bank digital currencies. We just know that these are digital tokens similar to cryptocurrencies issued by a central bank. But let's hear from him in detail. What is CBDC, its advantages, what is the impact on our existing systems, etc. Over to you, sir.
Thank you, Manju. Thanks everyone for joining this evening for this presentation by me. At the outset, there are some disclaimers because I am working in a global company. Views and opinions expressed here belongs to me only, not to my company where I work. And in the knowledge sharing session, expected omissions, commissions, and is subject to correct. In India, as all of you know, I work for about 30 years in the banking industry in India, across 4 major banks. Today, as a citizens of India and people like me and Navi sir, who are from banking sector, will definitely feel proud and great about the innovative measures our Indian financial system has taken so far. So these are some of the great and user-friendly, people-friendly, technology-driven initiatives issued by government and Reserve Bank of India and other entities in India, RTGS, since last 18 years successfully running. And when it was initiated in 2004, I was representing Globalist Bank at that time as a pilot bank at that time to test the RTGS system. Subsequently, I had an opportunity to visit to Sudan to help the Sudan Central Bank.
Are you sharing the screen?
Yeah, not visible.
I can see it. It is on that successful milestones of Indian financial system. That is a slide.
That is a scene. Yes.
Okay, maybe something wrong at my end. Okay.
Okay. RTGS was started in 2004, and then NEFT gradually implemented. IMFS. RuPay is a big success, not only India, but in now other countries also. UPI, all of you know, is integrating all financial entities in the country. NETC is a national electronic toll collection system, which was introduced in 2016, where FASTag is a brand. And now into 2022, RBI has introduced CBDC, which is called Central Bank Digital Currency. I quite hopeful of the way and technology implementation happening in the finance sector in India, in our country. This is going to be a great success, and it is also going to open new avenues for the technology people in fintech industries. The origin of this CBDC is, I think this, okay. So the Committee on Payments and Market Infrastructures is a committee under the Bank for International Settlement, known as BIS, is a global bank which takes care of the various settlement among the various countries. They made a survey in 2021, which has indicated that 90% of central banks globally, they are engaged in the activity or to explore to introduce the CBDC in one or other form. So based on that initiative and guidance, the indication from the BSI, the BIS, RBI set up a working group in October 2020 to study the feasibility of introducing CBDC in our country. And the working group has given their recommendation, their report in the year 21 February. Further, the Government of India announced the launch of Digital Rupee, a central bank digital currency from the financial year 22-23 onwards. That was the commitment given by government in the parliament during the budget session in February 22. Then Government of India also made a necessary amendment to the Reserve Bank of India Act 934, which enabled to run the pilot and subsequent issuance of the CBDC. Sorry, I think some problem. Yeah. Just a minute. government has notified the change amendment to Reserve Bank of India Act 2034, which will enable the RBI to test the pilot project and also issue the subsequent CBDC. Further to that, an internal high-level committee on CBDC feasibility has been constituted under the chairmanship of Sri Ajay Kumar Chaudhary, Executive Director of RBI, with a mandate to study the extensive study to undertake this area of a new currency system in India. And following that, further initiatives taken by RBI is on 7th of October 22 this year, RBI released a CBDC concept note for the public consumption, where elaborately it has been the details of the CBDC entire infrastructure, everything was given. My presentation is based on this particular concept note and another 2-3 articles from RBI executives. From November 1st, 2022 onwards, 9 banks commenced a pilot project in the secondary market transactions, where to interbank government securities exchange and settlement, they started using CBDC as a medium of value exchange. Instead of doing the financial transaction, they were using this CBDC, which was introduced by RBI on a pilot basis. That was successfully run for 1 month. Subsequent to that, RBI notified the commencement of the retail segmentation with 4 banks in 4 cities. What is this? Which was started from the December 1st. December 1st, 4 banks, ICICI Bank, State Bank of India, IDFC First Bank, and US Bank. They selected few customers, mostly employees, and they started a pilot project by introducing this CBDC. Next hour of the retail segment will be starting from shortly. I think after the 1 or 2 months successful running pilot project, they may going to expand the pilot project for 4 more banks in 9 more other cities in India. This is the so far the progress. Now we'll see what are the features of the CBDC in our Indian context. It is sovereign currency issued by the central bank, just like equal to our notes, even though it will be in a digital form and electronically transactable. Second point is it's a liability on the central bank, like our currency issuance process, and it was the entire amount which is coming into CBD also will be reflecting in the liability side of the central bank balance sheet. It is legal tender for payment and a safe store of value. Just like our currency, what we keep in our pocket, in our home or in our lockers, it is a legal tender for all value exchanges for goods and services, and freely convertible into cash in hard currency. In case somebody want to convert CBDCs into cash, that can be possible. And a fungible legal tender, where holder need not have a bank balance. Fungible legal tender means it can be replaced with the equal value of any other item. For example, we give money and take the gold. So that sort of replaceability is there for the CBDC also. We expect to lower the cost of currency operations. That is a major advantage government and RBI looking to save the cost of currency management in the country's financial system. CBDC is a programmable currency which will be help to control the CBDC operations, and payment systems will be take advantage of this programmability in the CBDC domain. Now we look at why the bank country is going for these CBDCs. Primarily, as I told, to reduce the cost of associated with the physical cash management. That is one part. Second is soil notes is a big problem in Indian environment. People recklessly use the currency notes. That will also be curtailed to major extent. Please mute, please. Sir, please mute yourself. To further the cause of digitization to achieve a less cash in the economy. By introduction of CBDC, RBI is expecting the cash circulation will be come down further. Now with the values and everything, it has come down drastically. Further, to bring down the cash circulation by way of hard currency need to be brought down. To support competition, efficiency, and innovation in the payment ecosystems, and to explore the use of CBDC for improvement in cross-border transactions. To transfer the money across the countries, it is going to help where other countries to have CBDC. Exchange and transfer of the money across the borders will be faster. And support the financial inclusion. This has a feature where it can be without the internet, the CBDC can be utilized. That is one of the advantage government looking to support the financial inclusion in the rural remote places. Safeguard the trust of common man in the national currency vis-a-vis production of the crypto assets. This is not cryptocurrency. That is a thing. And the people, India, whoever been attracted to cryptocurrency, and the RBI already done a lot of work to educate the people, and by openly declaring that cryptocurrency is not a legal tender in Indian financial system.
Adepu sir, one question can I ask here?
Please, sir.
So the previous slide, where you're saying that is the aim of the government to achieve a less cash economy, point number 2, right?
Right.
Cause of digitization is understood, but how would CBDC achieve a less cash economy? All that it is doing is, it is replacing physical cash with digital cash, correct?
Yes.
So
Sir,
the less cash economy aspect to physical digitalization, I understand, but less cash economy will CBDC achieve? If yes, how? That is a bit of a doubt.
Okay. Now, after this wallet interaction in various fintech company, we are not using cash for most of the transactions.
We're not using physical cash, sir.
Yes, sir. Same
but we're
way.
Still using digital cash, no?
Yes. So this will be another parallel system. CBDC is not anything. It is as good as cash only. But
so
in
it's like less
form.
Physical cash economy, not a less cash economy itself, right?
Right, you are right. Less physical cash.
Less physical cash economy. Yeah.
Okay. Paper cash will be reduced in the system.
Correct. Yeah. Okay. Yeah.
Sir, if I may ask the question here, how will this will be stored? I mean, will it be stored on an electronic device,
yes,
or a common electronic device like phone, or it will be a separate electronic device which will be issued for this?
Phone only. I'll come to that, sir. We'll come there. I'll explain that. We are there. So fundamental principles of CBDC globally as enumerated by the BIS, it should not interfere in the existing monetary system of any country. It should not be a hindrance to run the current system, whatever the country is following it. It should complement the existing economic monetary system in any country, and should promote the innovation and competition among the players in the economy and money domains. These are the basic principles given in a paper by the BIS for the other countries to follow and implement the CBDC. Now, in India, as a hello,
Ramesh here. Quick question. Somewhere I think I saw government is also intending to use this scheme-based, like.
Yes, sir, that is a programmability.
Okay, so that's a programmability. Thank you.
I will explain this. The type of CBDC now introduced in India by RBI is two things. One is retail. Is available for the people like you and me in the private sector, non-financial consumers and businesses can use the retail CBDC or. Whereas CBDC wholesale restricted for access to financial institutions like banks for interbank payments and securities settlement system. These are the two already commencing in Indian operations on a pilot basis. And the issuance and maintenance of the CBDs is there are three different types. Here we can understand how the CBDC exchange system works. One is called a single tier model, which is a direct CBDC model. Second one is a two-tier model, is called intermediary model. Third one is a hybrid model. So we'll see further how these models are being implemented. This is the description of the single tier model. At one side, we have a central bank, where other side is a consumer, CBDC. So consumer directly make the claim on the central bank, a direct claim on the central bank. All the users who hold the CBDs, they have a direct claim on the central bank. All records will be maintained and kept by the central banks only. And there will not be no intermediation. It will result into de-intermediation, means so third party will not be there in the exchange system or the monetary movement system in this direct CBDC model. No private sector involvement like any other fintech or anything will not be there. It will be between the consumer holders and the central bank. May disrupt the current finance system to some extent, and additional burden on the central bank, sorry, not CB, the central bank, because RBI has to go to take a lot of total responsibility in this model. The second one is a two-tier model, which is called intermediate model. Here we have central bank and other banks as a third-party facilitators. So currently the retail system introduced from the 1st December is running on this intermediary model, where as a person, myself, I can take first central bank will issue the currency to bank. Further, the bank will issue to its customer. When this was introduced in the first week of December, I downloaded the app from the ICICI Bank where I have my account, and I tried to start this using, but they said that already it is not open to all the people. They selected people only is open. That's why it's not there. Here, central bank issues the CBDCs to banks, eligible banks. Now, in the phase 1, the 4 banks, they already issued it. And further, the bank will issue to the end users like consumers like us. And we can exchange between the consumers, and we can use the currency to make purchases with the merchants. That is the model where there will be an intermediary bank has to be there. And to get the CBDs into our wallet, electronic wallet in our mobile phone, we need to get or purchase or exchange to the same value from our account. Here, in case I hold that app in my mobile phone, the app will be connected to my bank where I have my account. So I can make a request to the bank. I want 10,000 CBDCs in rupees, 10,000 rupees as CBDC. So bank will, across the counter when we get in the branch, the bank will issue the CBDCs into my wallet. So that wallet I can use where the merchant is accepting those CBDCs as a medium of exchange for the services and goods. That is a model. It has been started in India as a pilot project. Now this is a third model where apart from bank, there will be other third parties, service providers will be there. And the difference here is the claim from the consumers account CBDC holders directly on the central bank. The intermediaries don't take any responsibility about the either to accounting or the liability, currency liability, they will not hold it, but it will be with the central bank. The claim will be always passed through the intermediaries to central bank, and all the central bank account periodically they maintain the records. All the records will be with central bank for this particular model. So right now, the two type of CBDs already started pilot level, or one with the interbank market, and second model is for the consumers. They started by RBI. Now here is a small comparison to understand the difference between these various models. In case of direct model, liability with always central bank. Indirect model also with central bank. Hybrid is also central bank. That means the liability, as we are in the present physical cash level, when we read the notes, we have a assurance from the Reserve Bank of Governor, except a ₹1 note, and all the notes is assured in writing with a signature by the governor that this particular paper currency will have this much value it will be exchangeable by goods and services. The same way, this digital currency is also, CBD is also always a liability for the central bank. And who is the issuer? In case of direct model, central bank is issuer. Indirect model, central bank issues to intermediaries, that is by banks mostly. In hybrid model, central bank issues to the intermediaries and they distribute to the retail users. And with the operational part, under direct model, central bank hold all operations. In the indirect model, intermediaries like banks will hold all the accounting and bookkeeping, balances, tally, reconciliation, settlement, everything done by intermediaries. In the same way, hybrid model operation will be handled by the intermediaries, but claim and final accounts will be with central bank. The ledger keeping in the direct model, central bank will do it. And in the indirect model, intermediaries will be handling it. In the hybrid model, intermediaries as well as central bank. There is a difference. Settlement of finality in the direct model. Settlement of finality means value exchange. Netting of the value is with the final. There is no reversal of that. But in direct model, the finality will be with the banks, where any consumer has to take the bank only, but RBI or central bank will not take the responsibility. And in the hybrid model, again, the central bank will take the responsibility for the finality of the settlement. And when this CBDC was introduced, there was a lot of discussion in the RBI and other levels about the remunerative CBDs or non-remunerative. Remunerative means now when we hold our money in the bank accounts, we get an interest. That is a remuneration for us to keep the money in the bank system. Same now, when this money have been digitized and released and kept in the CBDC model, there was a thought, why you can't pay interest? And finally, after a lot of deliberation, it was by looking at the practice of other countries and other systems which are in development, Reserve Bank of India taken to go for a non-remunerative CBDs. In case, in my mobile phone, I hold my balance, it is as good as the cash currency in my pocket. That is a concept where RBI has taken a decision not to have any remuneration for the CBDs in the retail market. And I don't know what is the wholesale market, but the paper, the concept paper says, RBI has issued the non-remunerative CBDC. What are the balances within our wallets will not hold any, will not earn any interest. And CBDs are token-based one. Token-based operations represent a claim on central bank and function as a digital equivalent to a bank note. It is a bearer instrument. In banking, I think you bankers know what is a bearer instrument. In our currency case, whoever holds the currency in their hands, they are the claimants, they are the owners of the currency. Of course, in case of chori, that is a different thing. But for the financial system part, whoever holds the currency, they are the owner of that particular currency for the value. Same way, whoever holds the CBDC, they have the ownership of the CBDC at that point of time. And a person receiving the token will verify his ownership of the token is genuine or not. That is a system we already explain in the digital systems. In this entire chain of ownership of every token must be stored in an encrypted form in the ledgers of the entity who are holding the ledgers. CBDC retail is designated in this system. Now, whatever the retail market CBDC introduced by RBI, they are all based on the token generation system. Second one is account-based CBDCs. Account-based CBDC would require maintaining a record of the balances and transactions, and those transactions depend upon the verification of the payer's authority and balance availability. Before transferring the account-based CBDC, the central bank has to verify the authority of the owner from where the money is being CBDC is being transferred, and the balance available for the transfer of the amount to be done. But in the retail case, that automatically happens. Only money is there means it will be transferred. CBDCs are there, then only get transferred. While creating the account, the holder's identity has to be established by KYC system has to be followed. And now India CBDC W, that is wholesale CBDC, is designed in this system, in the account-based CBDC model. I have one picture. So this is a way that digital currency will appear. I'll come there. Okay. Now anonymity. See now, if we hold the cash, the people who do the black money holding are we don't know where the money is being stored and who is holding it. But that may not be possible in the digital era. Now, as far as this was also a lot of debate has gone in the last 2 years in the RBI circuits. Finally, the anonymity part has been taken some technical way that I will come to. Physical currency represents the anonymity, universality, and finality in cash transactions. Means when I part the currency note from my hand to some other hand, that's all. That's the end of the finality. And the currency note has got a universal applicability for the country's value system, currency system, we can exchange. As all digital transactions leave a trail, ensuring the anonymity found to be a challenge in the CBDC era. In digital transaction, providing complete anonymity has the potential to facilitate shadow economy and illegal transactions. So that's the thought process in the central bank level. That's why by taking advantage of the programmability of the CBDC, by which individuals could be allocated a certain amount of anonymity vouchers along with the CBDC in electronic form, that could be used for the small transactions. Large transactions will be visible to central bank by any way. So there, my current thought is RBI, when the system finally comes into stability, they may introduce a limit of transactions above 1 lakh or above 10 lakhs. On all those transactions, exchanges will be monitored and regulated by the RBI or the central bank, or they may put some other agency also. And in India, when the CBDC was being issued, there was one more discussion happened whether it should be a fixed denomination or a minimum value denominations. Minimum value denomination means all the CBDC will be a fixed minimum value. For example, 10 rupees. All currency will be in 10 rupees. All CBDC will be in 10 rupees only. Is that way? Or currently what we have the note systems. 1 rupee note, of course 1 rupee note may not be there now. 10 rupees, 20 rupees. That type of CBDC to be issued. So both have been evaluated, advantage, disadvantage. As the issuance of CBDC's minimum value is increased the volume and processing time, then RBI considered to, in Indian conditions, provide touch and feel experience to public. It is considered to issue the fixed denomination CBDCs. Let me, as I shown this image, now all the CBDCs are issued from 1,000 rupees down, all the currency notes, whatever there in circulation, that way up to that 25 paisa, I think that minimum coin nowadays in circulation is 25 or 50 paisa. Till that, all the current denominations in the finance system, equivalent CBDCs are being issued. This will be a normal image where the signature of the governor also will be there. And it gives a look and feel of same currency notes in the electronic form. And technical platform wise, now whatever the technical platform introduced by RBI to run the system, the requirements when identified as zero downtime to keep the economy functioning, because any electronic or any digital system, people expected to run on 24/7. So no zero downtime. Zero downtime is one of the requirements for the system. Zero frauds to prevent destabilization of the economy. So the system has been conceived where the frauds chances are very less. And decentralization for effective participation of the economic ecosystem. So this particular CBDC system now introduced in India are going to give a chance to all the players in the financial ecosystem currently there, in fintech, private, government, and the public in general also. Need for the CIA, that is confidentiality, authenticity, data integrity, and non-repudiation, also taken care while building this technical platform. High volume and the rate of transactions will be the key requirement of the ecosystem partners to avoid choking of the CBDC platform, resulting in high delay, any delay in completing the financial transactions. As we say, UPI system, now what we have been introduced, the volume of UPI is growing day by day. So by the expense of UPI system, what there in the current financial ecosystem of India, RBI has taken note to build a technical platform for the CBDC, also to scalability and load balancing, to take any amount of load at any particular time of the year has been considered while building the system. That what the concept paper is explaining in detail. Designed for the unpredictable workloads, particularly in cash management right now on festival times, the cash utilization is more in general nowadays, even though overall cash utilization has come down in the entire economy. Certain periods of time like festivals, that will be more high load in the cash system. So that also been considered by RBI while introducing this CBDC system. Zero loss due to DDoS systems and brute force attacks, something like that. All cyber related security aspects also been considered. And totally, the RBI has run this system as a mission critical approach to meet all the key requirements of from various experiences RBI and the financial experts have gained through the last 2 decades of the time. The current features what the platform has been introduced is highly scalable to support very high volumes and a rate of transactions without performance degradation. So RBI has kept such a technical system which will be able to support any amount of volumes when it comes into utilization. Robust to ensure stability of the financial ecosystem, not to disturb the current system. It's being established as a parallel system based on the experience from the other finance systems introduced by RBI like RTGS and NEFT. Tamper-proof access control protocols and cryptography for the safety of data, both the CBDC and transactional data. Whenever data transfer from one system to other system, the transactions also been properly ensured by applying the required cryptography and other safe transmission mechanisms. Cross-platform support to allow development of large variety of client applications using CBDC for the financial services. In the coming days, this system will be introduced with the other current financial system like UPI, RTGS, everything will be introduced. That is a vision of the RBI when this was being published. Ability to integrate with other IT platforms in the financial ecosystem must be a core requirement of the platform when it was designed. Configurable workflows for quick implementation of the policy level directives issued by the RBI from time to time. Whatever the RBI policy decisions from time to time, that has to be taken care so that this technical platform will be able to cope up with those changes as per the policy level decisions by government and the RBI. Comprehensive administration, reporting and data analysis is also built into the system. Highly evolved fraud monitoring framework to prevent occurrence of the financial frauds in the system are also considered, and RBI says all these things have been taken care when we introduce the system. As we go on implementing and learnings from the implementation, if any problem comes, that will be attended. That is a confidence has been given in the public document, the concept paper of the CBDCs. Factors considered in designing the CBDC, most of the things, that is what we expect a technical system, electronic system, scalability, and trusted environment in all the aspects of CAA, recoverability in case there is a deception, how fast it to be recovered, and offline functionality when there is no connectivity. At that time also this particular system is going to work. That is what the RBI says. Programmability is that, to explain the note, what they said is, if a particular money has been transferred in CBDC to a particular beneficiary for a particular purpose, say a fertilizer subsidy for a farmer, or for example, as a people like you and me, for example, I have my account balance, I have to pay 27 rupees to my landlord as a monthly rent. So I can earmark that particular amount in my CBD system to be paid to so-and-so on so-and-so time, so-and-so date. That much programmability is possible, but right now is not there. For a period of time, that programmability is going to be achieved in the system. That is what the vision of the RBI. Integrity with the existing payment systems, interoperability with the domestic systems like UPI, RTGS, NEFT will be connected to CBDC system. Cross-border payment enabler, this is a long vision when other countries like major countries like America or European countries, they also introduce CBDC. Cross-border payment will be through CBDC currencies. And data analytics been developed. What are the data flows? So the central bank will be able to do analysis of the data and take decisions on the system's progress. And resource intensiveness, when we're developing the hardware decisions, how power consumption and eco-ness, all these being considered while developing this CBDC technology. And the BCP cabinets also been built. And overall, in the system, RBI also going to put a consumer protection and grievance handling system as it been open to entire public as a general system to everyone. That is a knowledge I gained through RBI's concept note. And implications of the CBDC going to be in this way. It is going to have a particular effect on the monetary policy of the country from time to time. And in the financial, interfinance sector and liquidity management, it is going to affect because of the electronic, and so far we don't have an experience. And the financial stability of the country and legal implications. One aspect is now RBI Act have been amended, but connected laws also to be amended to meet this particular, particularly Banking Act has to be amended properly when it will be more open to public in general to use currency. Central bank balance sheet get affected because this amount will be on the liability side. AML, CFT. CFT is that is terrorist finance. Terrorist finance management, AML will be management has to be a burden in the electronic form to central bank. And the privacy of individuals, as I told, central bank is going to monitor this entire system. So it may throw some privacy matters as the time comes, will come to know. This is the quote from the US Federal Reserve. A CBDC could functionality fundamentally change the structure of the US finance system. This was been said by the US Federal Reserve. And the same way, this entire system going to affect our financial and cash management system in India operating also. And people are going to have one more option to use the money exchange. And definitely I'm, as a watcher of the finance system in India, I am sure this is going to be a great success in Indian conditions, despite we have disadvantages in the operations and people part. But looking at the RTGS, UPI, this system is definitely going to succeed and going to give more options to the people and the technology front. That is my hope. This is what I want to share as part of knowledge sharing. Thank you everyone for your time. And if anything is to be discussed, to the best of my knowledge, I will be able to clarify